Hey, what's good, everybody? Happy Tuesday already. Well, here we go. We've got a lot of things going on today, so we're going to kind of dive right into it. Hope you like the new layout. We've got this thing set up here off to the side, so now you can kind of see what we're going to talk about, what's going on, and we do this for our clients. So if you're a client of Jazz Wealth, we're doing this just to update you. Not that you really need to sort of stay tuned day by day, but whenever you have a moment, you want to check in and just see how the markets did or how your retirement investments may have done. That's what we're here for. If you need to watch this later on or you don't really care, that's cool too. If you're not a client of Jazz Wealth, this is what we do for our clients. This is part of the sort of experience. If we manage your IRAs, Roth IRAs, maybe you're rolling over a 401k. We want to help you with that. We want to manage those investments for you. We're trying to do something completely different here. So many great things coming, actually. Everything, I don't even want to say it. So many great things coming. Stay tuned if you are thinking about pulling the trigger, not quite a client of Jazz Wealth. You might like some of the things that we're about to do. I am super excited, sleeping like 3 hours a night. All right, maybe 6, but loving it. So what we're going to do today, we're going to jump right into it. The stock market was down on the day. We've got the Dow losing 172. The S&P 500 was down by 17. The Nasdaq sold off 77. Little disconnect there. We can already see the markets were not trading in lockstep, meaning they didn't all lose 0.5% or all lose 1%. The Nasdaq sticks out. Something's going on there, right? So we'll talk about that in a second. Anytime we notice a disconnect, of course, we want to dig in a little deeper and see if there's any reason to be concerned, any reason that we should make adjustments, and of course, we'll go from there. So here's the deal. Lots of news today. The markets really probably could have sold off a lot more. So I'm somewhat optimistic that those super volatile days are behind us, because here's what's happened. This morning we got Rex Tillerson, Secretary of State, decides he's resigning, and as of today, like at the end of business today, he said, that's it, I'm done, I'm out. So that was one thing that really could have taken the markets down today. Didn't happen. The markets actually started higher. Throughout the day, we're kind of unsure. How's that supposed to go? What's going to happen? Who's the new guy? He chose the CIA Director Mike Pompeo to replace Rex Tillerson. A lot of questions about what that might say as far as dealing with China. And so the markets mainly held in there. They didn't do too bad. It looked like it was just going to be a small down day. But then at the middle of the day, we got news of more possible tariffs on China, which really shouldn't have been new news, because last week when Trump announced the big tariff plan, he mentioned that if a country is going to charge us X% to import something to their country, we're going to charge them X%, the exact same, to import to our country. So he was very clear last week that, look, if you're going to charge us 75%, we're going to charge you 75%. If it's 25% for us to send stuff over there, we're going to do the same to you. So I think this is the start of that process. I don't know. I hope for the best there, but I'm not certain that's the best thing to do. I know from a business standpoint, that makes perfect sense. From a country standpoint, I think we got to dig a little deeper, so hopefully they get going there. Anyways, when that came out, the markets really started to pick up steam to the downside. Now I'm going to go to the charts because we always harp on something here. And so how does this work now? Let's go over to the charts. There we go. I got it. We always talk about how it's okay if there's some bad news as long as it doesn't hit the banking stocks and as long as it doesn't hit the semiconductor stocks. Well, the banks were already down today. They've had a great run here over the past few days, so it was kind of expected to see a little bit of a pullback. Banks lost 1%. And you go, okay, no problem. How about tech stocks? Are they hanging in there for us? Well, tech stocks had an amazing run over the last few days. You can see it on the charts there. Each blip that you're looking at, by the way, represents one day. So it looks a little choppy and messy, but you get it. Each day, whether it's green or red, that's the direction that we've headed in for the day. Well, today you can see the semiconductors, or tech stocks in general, down 1.5%. Now, that's not a big deal. They had a great run. It's very normal for a stock to breathe in, breathe out, breathe in, breathe out. Or a particular sector. Very common for a particular sector of the market to have these sort of ebbs and flows. Here is the problem. When you get somewhat bad news in the morning, then maybe a little more cautious news in the afternoon, plus the banks are down, plus the tech stocks are down, Now you've got a recipe for a market that will not sustain itself, won't be able to hold itself up throughout the day. And so that's exactly why you see this kind of mess here. Now, if you're following, I haven't mentioned this at all, really at all, I think. The deal with Qualcomm, it's so boring. It is so boring. What you really need to know is it's a tech stock. And so that tech stock got hit today. Some bad news, actually White House interference there. And so because of that, that helped pull the sector down. So a little bad news there. Tech stocks were weak today. And going back to where we started today, that is why the Nasdaq was down a little bit more than everything else. Is that a big deal? Is that something you need to be cautious about? I don't think so. Here in the short term, you got to realize we had a lot of overheated excitement to the upside, and maybe there's a little pullback. If we dig a little deeper, let's go to the charts again. I should just leave it there. If we go to the charts again, we've got oil. There we go. Oil down here, having a bit of a bad day, down just over 1%. Not a big deal. The sort of move there was a government report came out that said, hey, the shale producers out here in the US, we're doing great. And there was actually a government report that said we should be able to do 7 million barrels per day by the time we get to April. That's great news for us, right? As Americans, as a country, not great news for the price of oil because it's just adding to the mix. Now, what you're seeing is some of the global competitors here, OPEC and others, they're starting to make adjustments. That's very favorable for us in the long term. It will mean a little pressure on the price of oil in the short term. So anything energy related today in your portfolio likely suffered a little bit to the downside. I don't think that's a big deal, so I'll kind of move on from that. Okay. Interest rate sensitive products. We've been watching every day. We've been talking about this boost higher with the interest rate products. Your short-term, long-term bonds all pushing a little bit higher. REITs. I know some of you guys like the REITs. Very small exposure to REITs in some of our portfolios, but some of you really like those. You should know. You can see it on the charts there. Here is each day. Every little blip that you're seeing. It's had a nice run and actually trying to move out of this big downtrend. Technical traders will look at this and say, what is the overall trend? Are the REITs moving higher or lower? Temporarily, they are moving lower, and we could just kind of, if this thing will work, you can just kind of draw a line, and basically, is that line going up or down? It's going down, but in the short term, it's trying to break through that new downtrend there. So real estate, bond-related products, all coming off of their lows a little bit. Again, tech is going to be your weakest link in the mix. You've got the tech stocks down. Any ETF that's involved in tech is a little over 1%. So not horrible there, not too big of a deal. One of the bright spots today is in retail. You had Macy's up about 4% on the day. And that was kind of a big deal because retail's like, what? Like what's the big deal with retail? Macy's, the CEO came out, and this was again kind of conflicting news. The CEO came out, he said, I have a positive outlook going forward for our sales numbers, for what Wall Street expects. He said he thinks that they'll be able to match those numbers, if not exceed them. Stock started off higher. And then Credit Suisse, it's an analyst firm, they came out and said, they're doing a good job launching all these initiatives to try to grow. However, they still expect that about 100 stores are at risk of closing. So they really bashed on their good news for the day. Investors didn't really care. Stock was up almost 4%. That took higher. Dick's Sporting Goods, which didn't have a lot of good news this morning either. Actually, let me see if I can find it for you. Dick's was up 1%. Here's the chart. 1% on the day. It was lower to start the day. Some softness over there. They're expanding like crazy and not going great, but with that positive outlook in the retail sector, things went well there. So at least it finished strong. And then Khol's. Khol's is kind of like, I don't know. I'm starting to really like what they're doing here. Up 3% on the day, also participating on some of that good news from Macy's. Let's move over to General Electric. I believe this was the worst performer in the Dow, by the way. General Electric down, where's my thing? Down 4.5% on the day. Here's the thing. On the charts, you see GE 211 down there at the bottom. JP Morgan came out and said this stock is all but good to go down to $11. They kept their their rating on the stock, but they changed their price target down to $11. They are currently the lowest price target of all the analysts on Wall Street. So they think the stock will go, there's some at 12, there's some at 13. JP Morgan said, nope, $11 is where they expect it to go. So if you're participating in General Electric, yikes. Now the company did come out today and say they're cutting bonuses. Not cutting, they're eliminating bonuses for their top executives. That's the first time ever in history. The company's like 127 years old. So that's the first time ever that they've done that. They're really trying. I mean, they're trying so hard to make this thing a comeback, but very, very tough for them. Hopefully things go well, and you know, wish them the best. So that is about all that I have for you today. What else? Did I cover anything? If you want financial questions, financial advice, tips, tricks, things like that that you're trying to get answers to, send an email to support@jazzwealth. If you wouldn't mind, put Ask Jazz in the subject line, and we're going to answer all of those questions on our podcast. We got a new one coming up tomorrow, Sad But True, the one that's the segment where I tell a story about a public company, a CEO, something a company did that is, you know, it's sad, but it's unfortunately very true. And then I try to make up a story and see if I can confuse him, see if he guesses which one is correct. It's always shocking what the actual truth one is. But we're also going to answer your questions on there as well. If you need any help, if you're not a client of ours, you're thinking about Jazz Wealth, I'll leave you with a little plug. Keep us in mind. Lots of great things coming, but we are trying to be the place that not only helps you with your retirement investments, but also helps you get your dough straight. That's kind of the little theme around here. So we're going to stick with that. If there's anything else I can do with you or for you, you know where to find me. I have about 10 pages of work to do, so I'm going to get going on that, and we'll talk to you guys soon. Thanks for watching.